All right, it is March 31st and it's midday, going towards the last 2 hours of the trading day. I wanted just to go over real quick. AIM, AIM Immunotech, I traded them yesterday, so I bought it on this day, and I bought it because it actually spiked over the 200-day moving average. This is typically not really a part of my strategy itself, just because the 50-day moving average was not above the 200. But the main reason why I bought this is because typically when you see during the trading day that this first green candlestick engulfs some of the red candlesticks in previous days, the potential for the next day trading would be to test some of the higher highs. So I was anticipating this to test the $4 area. It didn't, and what happened yesterday is that it started to travel down after it spiked up. So I bought right at $3.15 yesterday, and then it's like right around over here. And then after it spiked at 345, and then once it spiked, it came right back down, and then it started trading right underneath the VWAP. Which, if you know, if it's trading under the VWAP, that means it is a downward signal. So it wasn't really trading down. It wasn't really trading up. It was only heading downward. Still had day trades, so I could have sold once it went into that spike, but I didn't. I held it through the next day, and it was fortunately up in the after hours. I'm not sure what happened in the after hours. There wasn't any really solid news other than there was some earnings that was released, but even the earnings didn't give anything definite. So, uh, it spiked during the pre-market to its previous high, and then it came back down. So I was able to get out pretty much with a scratch. I lost like $10 as opposed to maybe could have lost almost $200. So as I was able to identify that there was a double top forming, and then I got out. And yes, this is a double top because the previous high was tested. So in pre-market, if you're in or if you have a brokerage account that allows you to trade during the pre-market and after hours, you will be able to sell your position. If you don't have a brokerage that allows you to trade during those times when the market is closed, you would have been caught in this downward spiral in which the stock just continued to trade below $3. And going into the market open, as you can see, is still trading down where it's at $2.44. So that's why it's so important to have a brokerage that allows you the flexibility to trade during the pre market, after hours, and even if you want to trade with OTCs, over the counter stocks, which I will use in another video. So the other stock that I was actually holding was OMI, Owen and Mill. They are a medical device company. They were up, 2 days ago actually. They were on my radar for at least the past two or three past trading days. I figured that they were following everything in my strategy, and then it would actually go up. Yesterday, I did not buy it. I did not buy it. I was looking for an entry at $7.80. I didn't get it, and I figured that hey, it's not going to go any higher, or I just didn't know if it would move in the after hours time. Well, that it did. It definitely moved in the after hours to 950. Um, so once it got up to 950, which in the after hours, this this morning the pre-market it went up to $10.18. So this the amount of rise that this stock has, particularly in this market, was really strong. And another reason why I didn't buy this is because I was looking for social sentiment on Twitter, and I saw that there was an article that kind of talked about its financials and how bad it was, and it kind of did deter me from buying it when I originally was going to start. Even though it didn't hit my 780 target, it passed my 780 target when I wasn't there to watch it and actually make the execute the trade. But it was at other levels in the $8 range where I could have purchased, and that article just kind of just deterred me. And then, you know, it even though someone might come out with an article that might defame a certain company, there are often times that, you know, if you follow your strategy and you follow, you know, the actual news that's being put out, as opposed to, you know, companies who hire publicists or hire, you know, article writers to talk bad about certain companies because they don't want people to buy the shares of that company, which probably doesn't make sense to me. But, you know, either way, that analysis was essentially wrong on the short term. How the analysis is on the long term, I can't 100% say, but at least it affected me on my short term trading. So I'm just going to use that as a guide for next time when I'm trading this. So as we see now, like I said, I bought Owen and Minor this morning in the pre-market, and when I bought it at $9.50, right around here, and then it started to pull back, which I anticipated actually pulling back to. Oh, excuse me. I actually anticipated pulling it back to about 920, which it did, and then it actually broke down through 920 when the market opened. As you can tell by this long red candlestick here, let me zoom in a little bit. So right here at the market open, that's when it started to come down. Came down to 850, and I was holding it for a while, and I saw it test the $9 area a couple of times, and then I actually kind of just gave up on it right around here, right before lunch started. So I sold it, and I sold it at what, the 875 area, and then now at 130 it's up at 938. So, you know, this just shows me my patience is not as strong as it should be. So, you know, these are things that you can kind of just take into account when you're trading. And even when we see that this stock is coming down and is trading below the VWAP right now, you know, typically that is a sign that for me that the moving averages will also come below the VWAP, particularly if the 50-day moving average is coming down. The 100-day and the 200-day were actually trading kind of side by side. So I could have given this some more room since the moving averages were not so far apart in price. But because, you know, I wasn't sure if it was going to break through this 860 area, if it was going to really test it one more time, which, you know, it tried 3 times, but it failed. And then it started to hold support right after at 880. So, you know, this should trade higher, like I thought. But hey, sometimes you win some, you lose some. But the best thing to know is that having patience with these and following your strategy, and most importantly, following your plan that is according to your strategy, are very important factors that will help determine your success as a trader. So, hopefully, this was helpful, and see you. Maybe I will do another video towards the end of the day. I'm not 100% sure yet. And I'll see how I feel on any of these other, if I should even get back in on OMI. If I do, I'll record it. If I don't, you know.